Alright guys, welcome to the channel. This is the Boring Trader. On this channel I'll be sharing my daily and weekly price action analysis on Nasdaq, mainly focusing on liquidity, fair value gaps and intraday market structure. The goal is to keep things simple, just reviewing what the market actually did. In this video we are going to go over the price action for the entire week, breaking it down day by day. So let's get straight into it, starting with the Monday's price action.
Now, as you all know, there is an ongoing war in the Middle East, and because of that, we had a gap down open in the morning session. When the market opened at 9:30, price was trading around the 24,400 area. At that point, there were really two possible scenarios. Either the market could reject the gap and continue lower, or it could move higher and fill the gap entirely. So, in situations like this, the best thing to do is wait for more structure instead of jumping into trades.
Now, if you look at the 15-minute chart around the 10:30 candle, the market formed a fair value gap. But interestingly, price never came back to retrace into that gap. And overall, if you observe the 15-minute structure for the entire day, there really wasn't any clear pattern formation that offered a high probability entry. So from a higher time frame perspective, the market was just slowly pushing higher without giving a clean setup.
When zooming into the 1 minute time frame, you can see how the price action actually developed during the session. And you can see here the market was moving higher but without any clean structure. There wasn't any clear pullback pattern, displacement, or liquidity setup that would give a solid entry. So personally, I didn't see any high probability trade opportunities during this phase. As you can see here, the market eventually completed the full gap fill around the 12 p.m. mark. And after that, price basically continued trading without providing any clear setups. So basically for me, Monday ended up being a no trade day.
Now moving on to the Tuesday's price action. Going into the session, the two key levels I was watching were the Asia low and the London high. These were the obvious liquidity targets for the market once New York opened. And you can see here after the 9:30 open, the market first pushed lower, but around 10:15 it reversed and started moving higher, and eventually went on to taking the London highs.
And here you can see the 10:30 candle created a fair value gap. But price never returned to fill that imbalance before continuing higher to take the London highs. And because of that, the entire morning session didn't give a valid setup. But things started to change during the afternoon session. Around the 2 p.m. mark, the market had a strong displacement to the downside, which later created another fair value gap. At that point, the idea was very simple. If price comes back into that gap, we can look for short opportunities. And zooming into the 1 minute time frame, things have started to get interesting. You can see that price retraced back into the 15-minute gap, and on the 1 minute chart, we got a breaker formation. That breaker basically gave a confirmation for a short setup, with target being the 24,990 lows.
And look how the trade actually played out. The entry could have been taken around the 2:36 p.m. mark, right after the breaker confirmation. And the market eventually moved lower and took the lows around 3:30 p.m. See, overall, Tuesday was really a test of patience. If you are waiting for a clean setup instead of forcing trades in the morning, the afternoon session actually provided a very nice bonus to 2-hour trade.
Now let's move on to the Wednesday's price action. Going into the session, the two key levels we had were the overnight highs and the equal lows. These were the obvious liquidity targets for the session. And you can see here the market first moved higher and took the overnight highs, and then later reversed and took the equal lows as well. Here, if you look closely at the 15-minute chart, the 9:15 candle created a fair value gap. Then the 9:45 candle retraced back into that gap before the market pushed higher to take the overnight highs. So this was the area where we should be looking for buy setups. since price was respecting that imbalance. Zooming into the 1 minute time frame, you can see how the market came back to the 15-minute gap and started to reject the gap and continue higher. Inside that 15-minute gap, you can see a 1 minute fair value gap forming, which is why we can look for the actual entry. And you can see here, the entry could have been taken around the 2540 level with roughly a 25 point stop loss, targeting the overnight highs, which was about 85 points away. And the interesting part here is that the market reached the target in just about 5 to 6 minutes. So overall, this was probably the cleanest and best setup of the week so far. Now moving on to the Thursday's price action. If you look at the 15-minute time frame on Thursday, you can see the market was pretty choppy this day. The main level we had going into the New York Open was the overnight lows, which was the obvious downside liquidity target. And within the first 30 minutes after the open, the market actually took those lows. But the problem was that the move happened very quickly, and there really weren't any clean setups to enter. But if you look a little more closely at the 15-minute chart, you can notice a very small fair value gap formed around the 10-15 candle. It's not a very big imbalance, but it's still something to keep an eye on if price decides to come back. And in the 1 minute time frame, you can see that price eventually retraced back into that 15-minute gap. At first, it actually looked like the market might continue pushing higher, especially when you look at the 1046 1 minute candle. But the next two candles quickly rejected the move and price started moving lower again. Right around that area, I have marked a 1 minute inverse fair value gap, which is where we could start looking for short opportunities targeting the 24,570 lows. And here, see how the trade played out. The entry could have been taken around the 24,640 area with roughly a 30 point stop loss and about a 70 point target. The market eventually took the lows within the next 20 minutes. But interestingly, right after taking those lows, price moved back inside the range. And for the rest of the session, the market was extremely choppy without giving any clean setups. Moving to Friday, going into the session, the main level to watch was the London lows. But when the market actually opened, it opened around the 24,640 area, which is kind of a neutral and awkward place on the chart. At the start of the session, I really didn't have a strong bias. And when the market opened, you can see the 930 candle created a fair value gap. Later, when the 10 o'clock candle came back into that gap, I was looking for buy opportunities, but price didn't respect it and actually closed below the 930 15-minute candle. When price usually does that, it invalidates the setup, so there's no reason to take a trade there. But if you keep watching the chart, another 15-minute fair value gap formed on the 10 o'clock candle, and this time you can clearly see that when price retraced back into that gap, the market rejected and started moving lower. So this was the area where we could begin looking for short opportunities. Now if we zoom into the 1 minute time frame, you can see the actual entry formation. Here I have marked a 1 minute inverse fair value gap, and once price closed below that gap, that was the confirmation for the short entry. The entry could have been taken around the 24,690 area with roughly a 30 point stop loss, and the target was 24,600. You can see the market reached the target within the next 10 minutes. Overall, Friday was another solid trading day, very similar to what we saw on Wednesday. So basically that wraps up the price action for this week. Some days were good, some days give clean setups, some days were slow, but overall there were still a few solid opportunities during the week. If you found this breakdown useful, consider subscribing to the channel. I'll be posting daily price action reviews and weekly summaries like this going forward. Thanks for watching, and I'll see you guys in the next one.